2020 Vision, Neobanking and Fintech Developments.
So we're taking a look at neobanking and fintech developments in 2020, and joining me now we have Josh, Alex and Daniel joining me on the line to share their insights. So great to have you all joined, first of all, really appreciate it. And Josh, I'd like to start with you because it's been another huge year for Binance, and I would love just to get a run through of some of the biggest milestones and developments from your side.
Yeah, absolutely. No, great to be here, Jessica. Thanks for having us. So I think for us, I mean, this year's been really focusing on executing our vision to build this digital asset ecosystem that we've been working on for a while now. And so we really see Binance now as kind of a pretty comprehensive digital asset ecosystem that offers various component parts within the crypto asset space. So one of the key focuses, and I think we all know this, right? DeFi, extremely in fashion right now. There's so much noise and chatter in the markets about it, but we've been kind of keeping our heads down as much as we can, trying to build out our own kind of angle from the DeFi perspective. So what we've seen recently is we've seen Binance Smart Chain really go from testnet to mainnet. So we've got this out there in the market. People are playing with it. The design is cross-chain interoperability from day one. We're also smart contract functionality compatible, which is great. So we've seen people start using this thing as a bit of a toolkit, a fundamental, I guess, a base for people to build things on top of. So that's been really fascinating to see people start building on top of this thing. And in the background as well, on the wider DeFi note, we've actually been continuing to list a lot of assets. So there was a lot of chatter from the community earlier this year about, hey, Binance, when are you going to start listing more and more assets? This is what you guys do. And I think we've been quite quiet on that front, but we decided to support the DeFi economy as much as we possibly can. And part of that obviously comes with listing as many of the kind of assets that are out there as possible to support and foster the growth of that industry. So we focused massively on DeFi over the last couple of months, whilst obviously this kind of COVID strangeness has been happening in the background. So we're quite well placed right now to keep building on that front. We've also been focusing on derivatives. So we launched our derivatives business at the end of last year. We've seen it kind of go from all-time high to all-time high. We've got a pretty comprehensive suite of instruments out there right now, from perpetual swaps, quarterlies, options contracts, and the feedback's been really, really good so far. We've got increasing amounts of kind of retail interest as well as institutional interest. So that kind of validates what we were thinking, that derivatives are a key part in bringing quite a comprehensive and mature ecosystem to market participants. So we're going to continue focusing on that. And actually one of the core areas of I guess, difference between us and other providers is we provide altcoin derivative products. So for example, we've got all these altcoin perpetual swap contracts out there that a lot of other providers don't. So we're going to keep banging that drum because we think it's really important to keep building and diversifying the amount of derivative products that are out there. And then on top of that, we've got lots of other things under the hood that we've revealed recently, like our Binance Card. So bridging the traditional banking ecosystem, the fiat ecosystem, let's call it, with the crypto ecosystem. So we've built a crypto native debit card. So not a prepaid card, a debit card, letting you spend your crypto as you go. And that's been a real eye-opener for us, getting that into the hands of some select users that have been testing it in Europe for us over the last month or so. So lots of things under the hood. We've been carrying on building, despite all of the headwinds we've had in the economy and in the wider kind of COVID sense, carried on building, carried on kind of getting products out to market. And, it's just the halfway point of the year. We've got a lot more planned.
Never a dull moment. And Alex, I'd love to turn to you now because blockchain at UCLA really is a startup incubator system. So when it comes to financial distribution through your network, I'd love to hear, what you've been seeing so far in 2020.
Yeah, so thanks, Jessica, for having us. A pleasure to be here. We've been working on this ecosystem since 2017 when we started the UCLA group. Very early on, especially given our perspective as a university, we saw that this needed to be a regulated environment in order to catch all the potential that it actually has. So most of our research and focus has been on regulated digital assets. what we call, and everybody knows, as security tokens. We've been doing a lot of work on it. We wrote a book on it, so if anyone is interested, it's called The STO Financial Revolution. It's available on Amazon. It's just $1, and all the money goes to UCLA. It gives a perspective on the space of regulated digital assets across the globe and in the US. So we've been seeing different things, like out of UCLA, we have a few companies that came out. They'll send a shout out to my friend Alex Tan from NODT. They do chain analysis. We've worked with different companies like Panasonic, Lamborghini. A series of different blockchains and ecosystems had tapped into, and it's quite interesting because it's a growing trend as blockchain as a new frontier technology. Not only at blockchain at UCLA, but we have blockchain at Berkeley, which is a massive group, and we've been seeing a lot of institutional adoption. To Josh's point, now digital assets, the OCC here in the US just announced a couple of weeks ago, maybe 10 days ago, that retail banks are now going to do custody of crypto assets. And that's huge for the market because we're going to see more and more adoption with products like the Binance debit card and other more retail, easy to manage and easy to use products. So that's a lot of what we are looking at. DAX tokens, DAT token offerings is another one that we are looking a lot into. So banks, institutional players, and how they relate to digital assets is our focus.
Fantastic. And now, Daniel, I'd like to turn to you because you're representing a company that's global banking on the blockchain. So when we look at these two worlds, the blockchain sphere and then also the traditional banking system, I'd actually like to get your insights on how you're seeing them work in tandem.
Yeah, I mean, Ternio is focused on providing interoperability between what we think of as the crypto universe and the traditional banking and fintech systems. They're very complicated. There's a lot of intermediaries, and what ends up happening is consumers end up paying a lot of costs in between because of all those people, in the middle. And it's because there's complicated systems that have to do a lot of things, everything from compliance and regulatory type stuff, which, by the way, you can't be in this space if you don't have something that allows for compliance and governance. Now, a consumer might be able to have digital cash at some point in the future, and Walmart might accept that digital cash, but you can't be a fintech company. You can't be Binance, you can't be Ternio, unless you're going to be fully compliant, because you'll get taken down very, very quickly. And so what I think of is, when people think of cryptocurrency, they always think of it as the dark web, the Bitcoin people with the money laundering. And while, of course, that does happen, I'm here to tell you, we have like bank accounts that are seamlessly interoperable between cryptocurrency. You can buy crypto, get out of crypto, you have your own bank account. Ultimately, I think what we're talking about is just digital cash on the blockchain. If you want to have Bitcoin as a digital commodity, great. If you want to have some kind of other digital asset that is, more frictionlessly convertible as opposed to a stock, great. But, I think most like interaction and usage of blockchain in the future is just going to be digital cash. And so we're providing that interoperability between that blockchain or those sets of blockchains and what we consider today, Visa, MasterCard, the banks, etc.
And Josh, you were nodding along there, so I'd like to ask, your opinion if you agree, and then in that case, what are some of the biggest challenges for neobanks and industry fintechs at the moment?
So what I was saying was, I think a key theme we're seeing is usability and accessibility. Making this as accessible to as many people as possible, I think, is one of the key things that we're seeing as a real kind of, a enabler for the blockchain economy. If you can make user journeys, services easy to use, accessible and cheap, or cheaper than things they're doing in the traditional sector, suddenly people see the real value in this. One of the areas we as Binance have been looking at for a long time is kind of conducting different temperature tests in different regions about what people like, what they don't like, what they expect to see, and really, if you can make everything user first, if you can drill down to the core basics of what a service is and how it should work, suddenly people start using it. And I know that sounds so easy, but a lot of blockchain or crypto companies, us included sometimes, we get it wrong. We make it too complicated, and it's difficult for the users to kind of get up to speed and get using with this thing. So that's one of the core areas I think that all of us seem to be focused on now, making it easy for people to pick up and start using. But to your question about neobanks, I think neobanks have got large hurdles to jump over, but they are absolutely critical in kind of driving forward the fintech economy, because what we've seen over the last couple of years in the crypto space is a real hesitation from the traditional banking ecosystem to support digital assets, cryptocurrencies. They have been very reticent to open up banking channels, to open up core functionality like, for example, lending facilities. And that simply is because their risk tolerance and risk appetite is much lower. Whereas neobanks have got a slightly different risk appetite. They think outside of the box. They're problem-solving banking as a sector, as opposed to sitting in their position right now as an established banking provider, making decent amounts of money, not having to change it and disrupt their own sector. Whereas the neobanks are coming in going, we've got to do this bigger and better, and it has to be, more widely accessible to consumers. It has to be cheaper. But the problem with that is, how do they make money? So we recently have seen in the last few months, the financials come out from Monzo, from Revolut, from Starling Bank, and there's massive amounts of progress there. You can see that in terms of user numbers going up, transactions going up, deposit amounts being held per customer going up indeed, but profitability is still the core challenge there. And I think that's really because neobanking and the liberalization of the digital banking economy has led to massive amounts of competition. And with that competition means it's even more difficult to make money, right? But what I will say, and I'd be at fault for not banging the drum here, is where you see these neobanks adopting Bitcoin or being crypto compatible, they have an edge against others. So if you look at Revolut's earnings from their crypto space, as well as other neobanking providers like Wirex, is a massive engagement tool for new users. So I think neobanking is absolutely going to be going from strength to strength. It's going to be a challenge, but the wise ones like Ternio will be absolutely kind of picking up the Bitcoin baton and running with it at full pace.
And Alex, I'd like to get you.
That's a very good point. And and Josh brings a really interesting point, which is the competitive advantage that digital banks have over retail banks. We're working with one digital bank in Latin America, and that was the point I was trying to piggyback here on Josh's comments. Is if you get a digital bank who has a much lower cost of operation than a retail bank, and you plug it into an environment where people are not bankable in a large majority, Southeast Asia, Latin America, Brazil, you combine those two things, right? So if you look up online, there's already case studies that are happening in Latin America, these digital banks utilizing crypto or crypto-friendly products. We're working very closely with one of them that's issuing a stable coin. And you're massively giving people that previously had no access to banking services, full banking services on their phone. So you're going to see a massive adoption of these digital banks, especially with new regulations that allow digital banks to launch and have all the licenses and compliances like Daniel mentioned. I think we're going to see a massive adoption of that and a whole new disruption, especially in places like Brazil, where you have incumbent 4 or 5 banking companies.
And Daniel, if you look at the different elements of different neobanks, but also fintech organizations in the industry at the moment, what kind of organizations or even elements of organizations do you really think are the most poised for success?
There's a few. It's funny. I was thinking about what Josh and Alex were saying, and I'll say that if you think about, we use this term neobank, and all it is really is a bank that has that's chartered in some country, right? So it's got legal ability to be considered a bank now, and it doesn't have a bricks and mortar operation. That's it. USAA has been doing that for 30 years, minus they have one location. That's not new. and they're not using necessarily new technology, by the way. And I'm not particularly impressed by there's a couple of them that I'm super impressed by, but in terms of like, you grow 20 million customers, but you're still losing, $500 million a year. I mean, that's insane to me. I don't understand it. And the idea that somehow like we'll get there, it's the same story we see over and over again with WeWork, and you see it over and over again. We'll get to profitability. No, you really should be at profitability today. The story of not being able to have profitability should have been your first million maybe, and then you scale and you actually start to actually provide profitability. So who's doing it right? I think there are a few that are really doing an amazing job. One bank that's very forward thinking, I think, that is sort of under the surface you never hear about, is Cross River. Certainly, I think Starling is doing a lot of amazing stuff out of London. I do think that Nubank out of Brazil, right? They're doing a good job. But there's most of them, honestly, I'm not necessarily particularly impressed by. Like Revolut's got a lot of money, and they're doing. I mean, they're clearly growing quickly. But I'm not impressed anytime somebody can raise capital, $200 million, $500 million, and then lose a bunch more money. Like, I'm super not impressed by that. So I think there's a handful, and I think that also one person I talked to, I won't say which company, but it's one of the largest fintech companies in the world, and they were talking about how, like, what we're doing, Binance, what we're doing here, what Alex is working in some form or fashion in terms of working with technology, blockchain. We're already 2 generations ahead technology-wise than like the quote-unquote, neobank. And so, while some of them are kind of, playing around, Cash App and Venmo and Revolut are kind of playing around with cryptocurrency, Robinhood, they're not really actually making it interoperable where people have day-to-day utility, right? Where you can spend Bitcoin, right? And I think that's what we do. So I think that's going to be, the story has yet to be told as to who the next Amazon of this industry is going to be.
And you listed some companies there, and you've also listed the region. And I want to turn to you now, Josh, because you're the Director of Growth, but for the UK, but also different regions in Latin America. So is the necessities different region by region basis when it does come to these fintech neobank organizations, when it comes to requirements for the clients and consumers?
Yeah, absolutely. I mean, we realized as a company, we're a global company, but as cheesy as it sounds, we have to start thinking locally, right? And that's something that we've been focusing on this year, really taking a local approach to the way that we build our products and services. So if you look at the challenges that our consumers and customers, whether they're consumers on the retail end or whether they're corporate or institutional users, if you look at the challenges they face in Latin America, they're extremely different to the challenges that our retail base would face in Europe, for example. So we as a company have started thinking at a regional level and increasingly at a local level, actually, in being able to provide people what they need to do whatever it might be. It might be holding a store of value in Bitcoin, understanding, an easy to read at a glance dashboard of what their, net gains, net losses are on their assets. Others want to find a way of, for example, remitting currencies across regions, because it's cheaper to send a stable coin than it is to use their local banking provider. So we've really had to drill into what the use cases are for all these different regions. And Latin America for us is a really interesting one, because the use cases are so powerful at all elements of society. So, we've been looking in Brazil, we've been looking in Mexico, and there are large amounts of cross-border remittances happening there. And if you look at the average cost of those remittances, they're verging on criminal. I mean, it's just outrageous how much people pay in fees. And there's no excuse for that. And to go to Daniel's point, that's purely because there are layers upon layers of intermediaries, all taking either spreads or a fee on each transaction. Well, with blockchain, you can reduce the layers of intermediaries and really make it much less heavy in terms of intermediaries or friction, and that makes a material difference to people's pockets, because suddenly they can send something and it costs less than $1 versus $10. And if people are doing that every single day, every single week, it's a material difference to people's lives. So what we're trying to do is look at things regionally, work out what we can build on top of the core fundamental toolkit that we can offer people, and find ways to bring that value to them locally. We've got a long way to go in providing what I call a truly localized service, but we're absolutely kind of committed to that, and we think that's going to be an increasingly important part of our business, offering these local services on top of this kind of global toolkit that we provide people.
And if we look at, yes, please go ahead.
No, go ahead.
So I was going to ask, if we look at the Americas as an example there, and Josh, you have highlighted some of the issues, remittances being extremely high, and when it comes to intermediaries taking a cut each time. Cryptocurrency cards, and I'd like to ask all three of you this. If we look at Brazil, Venezuela as examples, cryptocurrency cards, and also organizations like Visa and MasterCard taking a percentage cut, is that something that makes sense when we look at the future of finance here? And Alex, we can start with you.
Yeah, and that's a very good question, because with the point I was going to reflect on Josh's comments. You have a lot more opportunity in these markets like Southeast Asia, China, or Brazil than you have in, for example, Europe or the U.S., right? We bank here with JP Morgan Chase. Why would I leave JP Morgan Chase to go to a neobank, or to go to, let's say, Binance will one day become a bank, or a global bank? Doesn't really add much. I have all the same services. It serves me well. But if I am someone sitting in Brazil or sitting in Venezuela, and I'm getting money for my family members that are abroad, sending me cash to help me out, that makes a huge difference. $10, right? $10 for someone in the U.S. or in the U.K. is a beer. $10 for someone in Brazil or Venezuela is almost like a week of their budget. So I think that in those markets is where you're really going to see a major adoption. And if you pair that with like a cell phone being this kind of demographic first computer, then you're poised to a massive growth in these markets. And that's what we're seeing from the clients on those regions that work with us.
And Daniel, I'd like to get your point on this as well.
I think first people need to remember there's many different types of blockchains, okay? And so I just paid $6 for an ETH transaction like 2 weeks ago. I just read on somebody's Twitter yesterday, and she was like, I had a $15 transaction. She was sending $15 and $12 gas fee for the $15 transaction. Now, that's Ethereum. That was Ethereum. It's not going to be sustainable for certain kinds of blockchains. Ethereum is great with smart contracts. It's fantastic. Bitcoin is a great store of value. It's fantastic. They're not efficient or well suited for payments. And the idea that somehow Visa and MasterCard and others are those particular organizations are problem, I think is wrong. I think they're the solution. Visa and MasterCard are going to be symbiotic in my asymmetrical warfare against Western Union and the large banks that are just ripping people off. And I'll tell you that when people started, this, if you think about how much animosity there was against banks, I mean, Bitcoin started as a visceral, FU to the banks, right? To the system. And I'd say that we traded one devil that we knew for a new devil, and the new devil was these centralized exchanges. And I think what we'll get to is we need to have, depending on the use case, some blockchains are well suited for payments. I think you'll ultimately have, from a technology perspective, sorry, there's a fly that seems to be interested in me. So you'll need to have a proof of stake type of blockchain that'll be used for payments. It's not going to be that all blockchains are going to solve all problems. And I do think that eventually what will happen is the banking system will just simply become the money that we deal with will be built on top of blockchain. So the average customer, the average person is going to be interoperating with cryptocurrency, and they won't even know it, because the world's largest cryptocurrency, most actively traded cryptocurrency, is in fact the digital dollar. And so I think that's where we're ultimately headed. And because of that, I think that'll ultimately lead for more people to be able to have access to custody their own assets and control their money in a way that they never could in the past. And I think that's ultimately what's going to be different. People will have more control and they can self-custody in a way that they never could before.
So there's some way to go, but certainly a paradigm shift is underway. Well, all of you, thank you so much for your insights today. It was great to get some context and hear your perspectives. I'm sure our viewers certainly learned a lot as well. So thank you all so much for your time today.